Well, this week was a little light in economic news. We had some reports, but nothing of major consequence. And of course, Europe is still on the headlines. What's going on there? Um, the most important economic news we had this week was the Beige Book and the ISM number. Beige Book reports is from the Fed. It reports on the 12 districts and how good things appear. And that came out pretty good. 7 of the 12 districts are improving, or were they reported improving conditions, and only one, Philadelphia, was deteriorating. So that was good. And the ISM report also came in a little bit better than expected at 53.7 or something like that. Anything above 50 is growth. And there's a couple ticks better than expected. But the rest of the news is kind of okay. Unemployment claims did go down this week. It's a weekly report, went down. So it really wasn't a bad week in economic news. It just was nothing very stellar. The problem, of course, continues to be Europe and will continue to be Europe. But it looks like we're going to be seeing some type of solution coming out of there. Now I say solution, the stock market is looking for some kind of long-term solution, and they are discussing it. What they are discussing is some kind of cohesion fiscally of the whole EU. Right now, remember, really the only thing they have in common is the euro, but they don't have like a central bank that controls interest rates for everybody, or prints money for everybody, or issues bonds like our Fed. And those kind of things give more power to a central organization, which a lot of those countries don't want to do, especially Germany. Why? Because Germany is obviously the largest. 30% of the whole EU is Germany, of economic power, anyways, and they're the one of the ones that have the best fiscal health and all that. And if there was going to be an issue of a European-wide bond, they would be the ones who'd be backing it mostly with their strength and their cash. So they're not very keen on that idea. But the long-term solution, either you break up and everybody prints their own money and sets their own interest rates and do whatever they want, or you get closer. And right now they're leaning toward getting closer as an entity. And that's the only way that's going to work, by the way, on a long-term basis. If that is true, the stock market doesn't necessarily need to have a solution. They need to have a path, or see a path of a solution. Short term, it's Spain. How are you going to save Spain's banks? Spain is the fourth largest economy in the EU, and I don't know if Germany and France have the financial wherewithal to save Spain. Now, I don't know if Spain needs saving, to be perfectly honest, but the banks do. But Spain, the government, no, they're not that bad. They just got way over their head in debt, like somebody else, us maybe. We're on that path of debt. We have to get off it. But it appears to me that the economies around the world, all of them, China, Brazil, Australia, us, and even Europe, are all in an effort to spur growth, are all taking steps to do that. China lowered its interest rate by a quarter point. A couple of weeks ago, it reduced its reserve requirements at the banks. Everybody is on that we're going to spur growth path. It's diametrically different than last summer when everybody was on the path of leave everything alone or tighten or austerity talk in the various EU countries. So on a 6 months basis from today, 6 months out, looks pretty good to me. Summer, pretty choppy. It's going to be that way.
The Invest Talk Update is a monthly briefing that gives you a snapshot of the past month's market, along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's Invest Talk talking points, plus news of upcoming Invest Talk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.